Welcome to Explain the Charts, where we break down the market movements and help you understand the why behind the price action. Today, we're focusing on the USDCHF pair, analyzing the news and chart data to make sense of this dynamic currency pairing. Recent news surrounding the Swiss franc and US dollar suggests a potential shift in their relationship. The Swiss National Bank, SNB, is expected to cut interest rates again in December, which may weaken the Swiss franc against the US dollar, but despite this, investors have continued to show strength in the Swiss currency, potentially indicating that the market may not be overly swayed by the rate cut. The Federal Reserve, Fed, is also expected to cut interest rates in November and December, but at a moderate pace, which should strengthen the US dollar. This creates a tug-of-war between the two currencies, with both showing signs of strength and weakness, making the USDCHF pair especially interesting to analyze. Let's move to the charts and see how this news is reflected in the price action. Looking at the one-day chart of the USDCHF pair, we can see a notable pattern developing. The pair has been consolidating within a defined range for the past few weeks. The upper resistance level appears to be around 0.8850, while the lower support level sits around 0.8700. This range has held strong for the past few weeks, with price action bouncing between these key levels. Breaking out of this range could provide a significant signal for the future direction of the pair. Let's zoom in on the one-hour chart to examine the more immediate trends in the USDCHF pair. The one-hour chart offers a closer look at the recent price movements. We can see that the pair has been trading in a smaller range within the larger one-day consolidation. The upper resistance level on the one-hour chart appears to be around 0.8670, while the lower support level sits around 0.8630. This range is more volatile than the one-day range, indicating greater short-term fluctuations in the pair's price. The one-hour chart also shows signs of a potential breakout, with price action testing the upper resistance level several times in the past few hours. However, it remains to be seen whether this breakout will lead to a sustained rally in the Swiss franc or simply a temporary spike in price. It's important to note that the one-hour chart is more prone to short-term noise and volatility, making it crucial to consider other timeframes to gain a more comprehensive perspective. Let's switch to the 15-minute chart to see how the pair is performing in the very short term. On the 15-minute chart, the pair is displaying some interesting short-term fluctuations. We can see that the price is currently hovering near the lower support level of the one-hour range. This indicates that the Swiss franc is under some pressure, but it's too early to tell whether it will break through the support or rebound. The short-term volatility on this time frame is quite high, making it challenging to predict the immediate direction of the pair. Traders relying on the 15-minute chart will need to be quick and decisive, as the market is prone to rapid shifts in price. However, the 15-minute chart can also provide valuable insights into the overall strength and weakness of the pair, which can be combined with other timeframes to make more informed trading decisions. For instance, if the pair consistently breaks through the lower support level on the 15-minute chart, while the one-hour chart is also showing signs of downward pressure, this might be a stronger indication of a bearish trend. Now, let's recap the key price levels to watch in the USDCHF pair. The most significant price levels are the support and resistance levels identified on the one-day chart, which are 0.8700 and 0.8850, respectively. Breaking out of this range could significantly affect the future direction of the pair, with a break above 0.8850 signaling a bullish trend and a break below 0.8700 signaling a bearish trend. However, it's crucial to remember that the pair has been consolidating within this range for several weeks, indicating that the market is currently in a state of indecision. The one-hour chart provides a closer look at the more immediate trends, with the upper resistance level at 0.8670 and the lower support level at 0.8630. The 15-minute chart shows the highest level of short-term volatility, and while it can provide valuable insights, it's generally less reliable for long-term predictions. Overall, the USDCHF pair appears to be stuck in a tug-of-war between the US dollar and Swiss franc, with neither currency clearly dominating the other. The news surrounding interest rates and the safe haven status of the Swiss franc adds to the complexity of the market. As a trader, it's essential to stay vigilant and observe the price action carefully, looking for signs of a breakout or breakdown from the consolidation ranges. Additionally, it's crucial to monitor news and economic data releases that may impact the Swiss franc and US dollar, as these events can significantly influence the direction of the pair.